The case in Uganda is the same. The mobile phone is changing not only the way people communicate, but also the way they access information and financial services. Today, 40% of Ugandans own mobile phones, though many more have access to them through friends or family. In fact, mobile phones have done such an incredible job of leapfrogging traditional infrastructure that there are actually more mobile phones than light bulbs in Uganda today. However, access to financial services lags mobile penetration. Only 1 in 5 Ugandans has a bank account, most of whom are in the urban centers. Access is part of the challenge. There are only about 450 bank branches, 600 ATMs, serving a country of 35 million people. That means there is one branch or ATM for every 30,000 Ugandans, compared to the USA, where there's a branch or ATM for every 600 Americans. For banks in Uganda, it is too expensive to invest in bank branches or even ATMs in rural areas to serve individuals who live on only a few dollars a day. Because few Ugandans have any documentation around their use of financial services, such as repayment rates on loans, they have no credit history, which makes them too risky for banks to serve. Additionally, in Uganda, bank accounts aren't free. Unlike banks in Western markets that offer products like free checking, in Uganda, most accounts require an opening balance, a minimum balance, monthly maintenance fees, and other charges. For the poor, these requirements make banking too expensive. Instead, many rural Ugandans use informal services, for example, local credit lenders for loans, and savings groups or informal mechanisms such as, quite literally, stuffing money under their mattress for savings. The challenge, however, is that often credit is expensive or not available when they need it. Additionally, saving cash at home exposes many to the risk of theft or the risk that they themselves will spend it because it's just too easily accessible. However, a new channel for financial services has evolved: mobile money. The first mobile money transfer service was launched in Kenya about 5 years ago with Safaricom's M-Pesa. Mobile money allows people to open basic electronic wallets linked to their mobile phone that are accessible by the simplest handsets. Instead of branches, mobile money uses a network of agents as cash-in, cash-out points. These agents are independent individuals who have their own livelihoods but accept or disperse money from their point of sale. They receive commissions from the operator to compensate them for their service. M-Pesa was a huge success. Nearly 80% of adult Kenyans have used the service. In the last few years, there have now been 140 mobile money operators deploying services, and another 104 plan to do so in the coming year. And the majority of these operations are in the developing world, specifically Africa, where financial services have not yet reached poor or rural consumers. In Uganda, 4 mobile operators have launched mobile money and now serve over 3 million customers through a network of 25,000 agents, and it's growing fast. By using agents, there's no need to make heavy investments in branches, which allows mobile money to profitably serve poor customers. Customers who previously had to use expensive bank transfer services or spend hours on buses delivering money in person can now send money quickly, cheaply, and securely. As a result, there's an enormous amount of excitement around the potential to use mobile money to deliver financial services to the poor. However, to date, the service has primarily been used for payments, sending payments to other people or paying bills. However, few operators have offered sophisticated products: savings, credit, even insurance. Research shows that barely 1 in 10 users of mobile banking are poor, new to banking, and using the service for anything other than payments. This is the challenge we're looking at in Uganda: how to come up with new financial services products to deliver over the mobile channel that are appropriate for the poor, but also economically viable for the provider. That's why we're presenting this extreme design challenge to you. Imagine you're the head of a company providing new products for the unbanked. You might be a telco, a bank, even a startup. You're about to design products for people who have never used iPads, computers, or even smartphones, but they are heavy users of basic mobile phones. You need to create a financial services product that's simple enough for an individual who might not have made it beyond elementary school level education to understand, but is also profitable for you. In a moment, we will share with you profiles of 4 users representing different types of unbanked customers who each have different behaviors and needs. We look forward to seeing what new products you develop for them.